Okay, we are pleased to have Daniel.Winters, tax expert with Global Tax Accountants. He advises cryptocurrency clients from miners to traders to all kinds of different players. You can visit his website at www.globaltaxaccountants.com, and he's based out of New Jersey in the US. He's Actually, Daniel, thank you for coming on, and could you give your background in your own words so that the listeners have an idea of who you are and where you're coming from?
Sure, Swap. Thanks so much for that introduction. I just want to say hi to all the traders out there. I hope everybody bought on the dip when the price kind of crashed 9% a couple weeks ago, and that you sold when it's going up now to 750. So I'm a Bitcoin and cryptocurrency accountant. The majority of my tax and accounting clients are people who are doing something in the Bitcoin and blockchain space. Kind of like Swap said, some of my clients are miners, not limited necessarily to Bitcoin, because it's kind of hard to make money mining Bitcoin unless you're really big these days. But there's lots of other cryptocurrencies, and the tax treatment's pretty much the same. Traders could be trading on their own account, could be local Bitcoins, blockchain developers, lots of neat stuff. So this is kind of what I do. I'm a tax accountant who a couple years ago decided cryptocurrency is the future and that I want to work in this industry. So I started going out to conferences and meetups, and it's kind of how I found this group. So I'm looking forward to listening to what you guys have to say. And I'm going to talk about the latest IRS action regarding Coinbase.
All right, yeah. So we had a good discussion earlier this year where we talked more broadly about general tax issues that people in crypto face. But recently we've got some news, as you mentioned, with Coinbase, where the IRS, the US tax authorities, have sued Coinbase in order to get the tax records, apparently, of all Bitcoin purchasers and users on their side. So, and the IRS in general is apparently focusing efforts on tracking crypto traders and users. So give us then, I mean, you've written this, Dan has written a great article on Medium about the specifics of the case. And so, and the link is in the chat there, and it's going to be at the bottom in the description of this video. So Dan, give us then a rundown of what this case is about with Coinbase and the IRS, and what exactly, because you've dug through all the different text on it and everything. So why don't you give us a rundown of exactly what's going on with Coinbase and the IRS?
Sure, thanks again. Well, you know, as everyone knows, the IRS is well aware of Bitcoin. The IRS also sent out guidance about this going all the way back to March 2014. And they've stated clearly what it means for tax purposes for people who mine Bitcoin, who buy it and sell it, who receive it as payment for goods or services. They stated pretty clearly what needs to happen for their, for IRS rules for people who generate income in Bitcoin. And that's the first thing I wanted to say, is that the IRS already stated 2.5 years ago what it means for tax purposes for several different transactions. But here's the thing. We all know every Bitcoin transaction appears on the blockchain, and each address, it's pseudonymous, it's not truly anonymous, but every blockchain transaction, or every Bitcoin transaction, is going to hit the blockchain. But of course, there's no reporting mechanism so that this information is fed to the IRS or any other tax authority. So frankly, they really don't know what's happening with a Bitcoin transaction, except if you are using a service like Coinbase, which is your on-ramp to the Bitcoin blockchain. And Coinbase, as a U.S. company, must comply with numerous U.S. rules. And that's how the government would get Bitcoin transactions, by forcing companies like Coinbase and exchanges to provide information to the IRS. So that's kind of the first thing I want to say is the IRS doesn't analyze the blockchain looking for big whales to go after, but the IRS can pass rules to make companies like Coinbase provide them with information.
So they're allowed to make they've made a rule that doesn't have anything to do with Congress or anything, where they can just sue and acquire personal data from exchanges that are US based and are dealing with Bitcoin. Are they really? Does this case have merit? Are they really going to get all this data?
Okay, I want to clarify a little bit what's happening. So far, this is an attempt, but it hasn't happened yet. And I want to step back a little bit. Let's talk about the regular world of fiat currency like dollars. There's a whole set of rules for the New York Stock Exchange or any publicly traded stock exchange in the United States, and all of these trades need to get reported to the Internal Revenue Service. And during the year and at the end of the year, if you have a regular brokerage account with, I don't know, Vanguard, okay, or anybody, Morgan Stanley, doesn't matter, the IRS is going to receive information about every single trade you have done during the year. And they will receive information such as date of purchase, purchase price, date of sale, sale price. And with that simple information, how much you paid, how much you sold, well, they know your income. And every single one of these trades gets reported to the IRS. And if you make a mistake and you don't report your trades, you're going to get a letter from the IRS saying, oh, by the way, you have $50,000 of trades, and we don't know what you paid for this. So you have $50,000 of income, and you owe us a bunch of money. So I just wanted to say that there is a well-established set of rules for normal fiat currency trading of stocks and bonds and many other types of assets. So Bitcoin being such a new technology, as I was saying before, there is no reporting system. Okay, and the on-ramps to the Bitcoin blockchain like Coinbase, these are the companies that have the personal information for Coinbase users, and they know what their activity is. However, right now, Coinbase does not send 1099 forms to the IRS. They do not send information about trading to the IRS. If you're a merchant and you are receiving enough payments during the year, basically over 20,000, yes, they will send a form, but they don't. For somebody like me, and I have a Coinbase account, they don't report the different activities that I've done because I don't get over 20,000 transactions. I apologize. I'm going to skip back. Coinbase will report merchant transactions to the IRS on a Form 1099-K if the merchant has at least 200 transactions and $20,000 of gross revenues. So that is what Coinbase does from what I've seen so far. They are not sending the IRS 1099 forms in any other circumstance. So here's the background there, that there's no reporting mechanism. So that being said, let me get to the heart of what's going on with this declaration filed by the IRS. Here's the news, guys. The IRS hammer is coming down. This has suddenly become a serious hot button issue. The IRS is on a major freaking fishing expedition. They have exactly 3 people that were noted in this document that was sent to a court, a U.S. District Court, 3 taxpayers were audited, 2 corporate and 1 individual. And because of this, the IRS is now saying, well, 2 of these taxpayers had accounts with Coinbase. And therefore, we want to see every single transaction record for every single Coinbase user for 3 years, from 2013 to 2015. We want it all. And we think we're going to find something. And we don't know what, and we don't know who. And it's an unprecedented reach for the IRS to just take steps to receive huge information on everyone using Coinbase for 3 years, because maybe they're going to find somebody breaking the law. So that is the gist of this declaration that was posted to a court just a couple days ago.
So when Coinbase says that they're going to fight and defend against this action, are those just nice sweet nothings, or do they really have a good legal basis for preventing this? Because you said it's unprecedented, right? So I mean, if Coinbase just sort of lies down and lets them take the data, that's really bad. But they've indicated that they're going to fight it. So are the prospects for that good? Are the current Coinbase users then just totally screwed, or what's the situation?
Well, the fact is that I'm an accountant and I have what's called a master of taxation. So really my expertise is limited to tax rules, and what you have asked is a strictly legal question. So, I mean, all I can really do is speculate. And that's why I won't say too much. Coinbase has made some public statements saying we will fight this. And in that respect, I know as much as you do. I don't know, but I'm just trying to, give an analogy for how far the IRS is really trying to go here. It's like you have a bank and they have 150,000 accounts, and 3 of those accounts are linked to money laundering. So the IRS comes to them and says, I want every single transaction record for 3 years of every single one of your accounts, 150,000 of them, because I found 3 of them that were breaking the law and were hiding their money overseas. It's really extreme.
Okay, so let me phrase it differently then. So what could the IRS, once they've acquired all of this data from 2013 to 2015, all this data on US customers handling in Bitcoin, what can they do with it? What's the next step? I mean, like you said, it's like a fishing expedition, but outside of this, what they're trying to find for criminal issues, is it then reasonable or likely that the IRS will take all this data and then start sending letters to every single user and demanding back taxes, or because there's also a resource constraint there, right, for what the IRS reasonably wants to use their man hours for. So just what can we expect in that area?
Okay, so this is what the IRS does when their clear intention here, and I'm going to go back to the declaration that just got posted yesterday to a court, okay? And I will answer your questions, just a little more background. There's IRS employees that have excellent detailed knowledge of the entire Bitcoin ecosystem. The man who wrote this declaration clearly understands everything: mining, trading, every transaction in between. They're really studying up on this stuff. The agent who wrote this declaration is an expert in finding money that was hidden offshore. And then he got interested in Bitcoin because it's could be used to hide money. Okay, so that's kind of the one thing that I wanted to say there. So what does the IRS do when they discover someone with undeclared income? They send you a letter demanding, wow, we think you have another $100,000 of income, or another $50,000, or even another 3 or 4. I've seen all this stuff for years in a different context. If the IRS discovers that you have undeclared income, they will send you a letter saying, this is your actual income, you owe us money. And it could be handled simply by mail, and or for bigger numbers, they will have a full-scale audit. You will need to hire an accountant, a CPA, in order to defend you, and then you will be forced to provide information to explain and document your income. And if your documentation isn't there, they will assume they will make an assumption, and you can bet that that assumption is your income has been increased and you owe them money. So what can the IRS do? If the IRS actually receives all this detailed information from Coinbase, they will be able to go through and cross-check a name and a social security number and activity in that account, and then review the tax return to confirm that these transactions were actually reported on their return. And if they don't see something, they're going to go nail people.
And I mean, when IRS makes these kinds of broad-based requests, though, what's the timeline of how long it takes for them to actually get it, and the time it takes to work through it all, and these kinds of issues? How long can that drag out?
It really kind of, it's hard to ask, because I mean, I've never seen them try anything like this before. The summons that was explained in this declaration, it's what you call a John Doe Summons. And again, they're not going after a particular person. They have said there's a class of people who meet these characteristics, and as a class, we want to know everything about them. So I don't know. Let's say theoretically they receive the information. I don't know how long it will take them to go through it, and then start taking action. The nearest analogy I can think of was back in 2003 and 4. There was a major issue with UBS Bank and the United States Treasury Department. The IRS is part of the Treasury Department. And it turned out that there were American and Swiss employees of UBS Bank who were actively assisting American citizens to transfer funds to Swiss banks, to the UBS Bank, hide that money, and completely ignore the law that required those American citizens to report all of their income worldwide to the IRS. So the ultimate outcome of that situation is that there was a high-level diplomatic dispute between the United States government and Switzerland, and the Treasury Department demanded, you are going to name names. We want to know who these people are. And what happened? Swiss banking secrecy cracked, and they sent over a list of several thousand people to the IRS. And then the IRS began investigations of all those people. It ended up in a new law that was passed in Congress called the Foreign Account Tax Compliance Act. And that act requires any bank or foreign financial institution to track who their U.S. customers are and report information about that U.S. citizen, such as their name, their social security number, their account number. And the banks all over the world are required to track information about U.S. citizens and send that information directly to the IRS, where they can then cross-check it against what's reported on their taxes, and the FBAR, Foreign Bank Account Report. So I know that was a long explanation, but the nearest analogy I can think of goes all the way back 10 plus years. And that ultimately resulted in not only a new law in the United States, but an unfortunate situation where basically every bank in the world now has to report back information to the IRS about their U.S. citizen clients.
So what about non-US people who have accounts at Coinbase? Are they also going to have their information taken by the IRS and perhaps passed along to whatever national tax authorities are under their jurisdiction, or is this only limited to US people?
The declaration for the summons specifically mentions U.S. persons. So it only mentions U.S. persons. This does not say anything about anyone who is not a U.S. person. So this seems to apply strictly to U.S. persons, meaning not only individuals but business entities as well, trusts, and the broad term is U.S. persons. But it said nothing about non-U.S. persons.
So would would the IRS be able to do similar action against exchanges that are not based in the US? Because a lot of crypto businesses and exchanges in general, one of the bigger issues they find is, okay, where should they be domiciled and where should their headquarters be? And is there then a benefit to being based outside the US where the IRS doesn't have any jurisdictional ability to deal with you, unless I suppose if you have US customers. But could you talk a little bit about this?
Well, there isn't actually that much I have to say there. I'd kind of sort of like to focus more just on what exactly the IRS is trying to do. And I will mention about what you said about non-US exchanges. This is a narrow targeted summons. It only applies to Coinbase, and it's a step toward the summons. They're basically providing a sworn declaration saying, hey, look at all this stuff. We know people are hiding money, and they want the court to approve it and issue the summons. So it's only applying to this one company. Here's the broader issue, though. If you're an American citizen, we're required to report all our income on a worldwide basis. That means if I have an account at Bitfinex, or I have an account in Bitstamp, or I have an account at Sir Bitcoin down in South America, or whatever, wherever, if I buy Bitcoin at one price and I sell it for more, I just have a gain, and I need to report it to the IRS, regardless of whether or not the exchanges actually report anything. And to step back to what I was talking about, FATCA, the Foreign Account Tax Compliance Act, U.S. citizens always had, since income tax law was passed, the requirement to report worldwide income, but there was no enforcement mechanism. And the Foreign Account Tax Compliance Act created a huge enforcement mechanism, a gigantic database in the U.S. government. And now it's got thousands of feeds coming in there all the time from banks around the world. So to kind of step back, that's what happened for fiat currency accounts. Will the IRS decide we're going to push to have non-U.S. exchanges directly report the transactions for U.S. citizens? I don't know. But the fact is, you're supposed to report it anyway. And this is exactly what I do for some of my clients because, hey, all the big exchanges are outside the U.S.
Okay, so let's say then I'm a US person. I have an account at Coinbase. I've done lots of business on there, buying and selling bitcoins, etc. And I haven't filed any of that information with the IRS. And let's say I've been active in 2013, 14, and here we are almost in 2017, and I say, oh shit, okay, I need to fess up. I need to, what do I do if I'm in this situation?
You may want to seriously consider filing amended tax returns to report all that income, to report the income that was never reported. And for that, you have to hire an accountant to do it. You have to go through all of the records for that period, and then you send in a amended return, which is basically it provides additional information for things that were not in your original return. In this case, it would be more income, and then you would have to pay any tax that was due, plus any interest and potentially penalties.
Okay, so let's talk about the risk of the penalties then, because I think people understand, all right, if the records are there, now the government has full accountability of this, and you're definitely at risk of being pursued for this liability. So people have to file the amended taxes. So how to minimize the penalties associated with that process, assuming it's inevitable that they come after you anyway?
Well, there really isn't that much you can do to minimize the penalties. When I say penalty, I mean that, let's say someone has unreported income and from 2014 they file an amended return and it turns out that they have an additional $10,000 of tax to pay. So for a 2014 tax return that was due April 15th, 2015, well, we're now in late November 2016. That $10,000 was actually due April 15, 2015, and you're going to have to pay the $10,000 plus interest on that $10,000 that was due 2.5 years ago. So there's really nothing much you can do about the interest, and it's simply impossible. It never gets wiped out. The penalty, it gets a little more complicated and it's a little more technical than I want to go into without literally being able to show numbers. But another penalty that exists is what's called an underpayment penalty. For instance, if the tax due for that particular year is $10,000 and you paid in $10,000 during that year, okay, and then you file your taxes in April, you don't report Coinbase, and then you end up at a $500 refund or something, okay? So you owed $10,000 and got $500 back, all right? You're an employee, but you didn't report Coinbase. Well, now it's 2.5 years later, you go and report more income, and you have an additional $10,000 of tax to pay because you had a great year, okay? But it wasn't reported. Well, you were supposed to pay in $20,000 during the year, but you only paid $10,000. So you have to pay the $10,000 and an additional penalty because you should have paid earlier, plus interest. So it's tax due, late penalty on the tax payment plus interest.
And which is the benchmark rate that they use for the interest that you owe on the past taxes?
Thankfully, I believe that's 3% right now.
And what is this based on, 3%, when there's 0% Federal Reserve rates and government bonds are yielding like barely 1% on 10-year? Where does 3% come from in that context?
Great question. The IRS interest rate on tax payments it's actually part of the tax code, and it's based on, I can't remember which rate, frankly, because I never need to know, but the law essentially says take this Federal Reserve rate and add another percentage to it, and that is the official IRS interest rate on late payments. And right now I believe it's sitting at 3%. It changes, of course, with the underlying rate, but more or less that's how it works.
Okay, so I think that covers this specific on the Coinbase action that the IRS has done. But more broadly about what the IRS, and you mentioned that they do have some expertise on what's going on with Bitcoin, and this agent in particular who wrote this request for summons, or I'm not sure what it's called. He said he's very knowledgeable on the issue. So what does this mean as part of a general trend of what the IRS in the US is doing relative to taxation on crypto and record keeping and stuff like that? Is there other things going on with other exchanges or other sort of signals or about from the IRS about what's going on in the future with their actions in the crypto space?
Well, basically, this is the big move, and I've kind of been wondering when they were going to do something. The big picture, kind of what I said at the beginning of the call, I think the hammer is coming down. I think it's entirely possible that, again, this is a preliminary step, and any summons that's issued, Coinbase will fight because they don't want to provide this information. But let's say nothing happens at all. Coinbase, they issue a summons, and then they negotiate back and forth, and Coinbase wins, and they don't give anything to the IRS. Well, we still have a situation where suddenly the IRS has decided, hey, these people are laundering money. We got to find them, and we're going to nail them. So suddenly, from 2 years ago when it was, okay, this is what you need to do. Now they're really paying a lot more attention. And I really think, and I kind of closed my Medium post with, I have a Coinbase account. What does it mean for me? If they do serve the summons and Coinbase does have to comply, if you had a Coinbase account and you accurately reported your Bitcoin income, well, you have nothing to worry about. If you didn't, you may have a serious problem. And we really can't gauge accurate, to a percentage, the chances of someone being audited, but absolutely the IRS is paying a lot more attention this week than they were a month ago. And they've began paying real attention to Bitcoin and the possibility of hiding income. And they don't tend to forget things once they start working on something. So they have a task force, and this agent's part of it. So I guess what I'm saying, as a general trend, it doesn't really look too positive. And that's sort of, my final thoughts there. That I think we can really look for more enforcement. And they're basically trying to use a hammer, okay, to swat a fly, but part of what the IRS does is they don't have the budget to go after everyone that they think isn't paying their taxes. They will find specific targets and try to scare people into complying. That's why once in a while you'll get a celebrity like Wesley Snipes or Willie Nelson or Leona Helmsley, and when someone with a public name gets in trouble, they'll make a big deal out of it to scare people. I guess that's my thoughts on that one.
Okay, so I mean, you say the IRS is paying more attention this week than they were a month ago, and it's quite possible that a month from now they're paying even more attention. But are you able to quantify in any way how much manpower they are dedicating to crypto issues? I mean, you mentioned they have a task force. Yeah, how many people or man hours are they, or money are they investing in going after crypto specific cases?
I don't actually know. When I read through that 17-page document, it mentioned, and they didn't use the word task force. That was like my slang. They didn't state exactly how much manpower that they have here, so I don't really know. But again, the key takeaway is they do have expertise. They understand the ecosystem, and they've decided people are hiding money, and we're going to find them. And we joke about the IRS, with my friends, other accountants, and we kind of say, "Oh, these guys are dumb." Well, unfortunately, whoever wrote this lengthy declaration is pretty freaking smart. So I don't know the number of man hours, but I know that there are actually some very skilled forensic accountants, and they spend their professional lives trying to find hidden money.
All right. Well, I think that covers the discussion on these issues. So if anybody out there who's listening on the TeamSpeak and has permissions to talk, if you have any questions related to this for Dan, he's a tax expert, not a lawyer. So make sure that the questions are focused on tax-related issues, not legal questions. So anyone out there has a question, feel free to chime in now. Which maybe we covered things too well. Nobody has any questions.
What would be the threshold, Charlie? What would be the threshold you'd say for, someone should worry? I assume the IRS could go after any unreported, what money that they think that it's owed to them, right? But for the casual Bitcoin user, the retail person that uses Coinbase, that probably doesn't do much cashing out per se, should they have to be worried about all of their expenditures, and I would just because right now, like, if you buy things online, you're supposed to report the unpaid tax on that, right? And sometimes at a state level, you'll pay the tax. I don't recall if there was a federal tax for that, but it's just for the casual user. Is there much to worry about?
The trouble is they're not telling us, okay? And the kind of issue that we've run into here is, and someone had posted a question in the chat saying, what's the difference for virtual currency, which is treated as property? How's that different from foreign currency? So what we have here is, because of the way the rules work of Bitcoin being a convertible virtual currency, if I buy a Bitcoin for $500 and then over the course of 3 months, from my Coinbase account, I buy some stuff on Overstock, I buy something on Expedia, and I send some friends some money to, pay back a nice meal we had. There is no minimum threshold to report the transactions. I'm supposed to report 19 transactions where I spent $20 each over the course of 3 months. And the reason there's no threshold, again, it kind of goes back to the legacy set of rules. When someone sells a stock on the New York Stock Exchange, sometimes you end up with fractional shares that are worth 53 cents. And those trades get reported too. And I've seen this, like, I don't know how many times, that you have a 53-cent trade, cash in lieu. It's some little spin-off. So to kind of go back to what you said, if well, what's the level at which we need to be concerned? Unfortunately, I really don't know. I don't know. Logically, they don't have the budget to go after smaller, people with a smaller level of transactions, but they're not telling us what their threshold is. So all I can really do is take a very conservative position and say, even if you only have one Bitcoin and you spend it over 3 months, you can use a tool like LibreTax and report those transactions. You don't necessarily need to hire an accountant if your stuff is, again, small scale. That's why I'm suggesting LibreTax or Bitcoin.tax. These are tools that for a low price, you can do the stuff yourself. So unfortunately, that's the only way I can answer the question, is we don't know what their threshold is. So be conservative, and if you have one coin and you gradually spend it over time, get a LibreTax or Bitcoin.tax account and attach your appropriate schedule to your tax return. You're playing it safe, and you just really reduced your risk. The other thing I'd like to ask back to you is, what did you said something about, I'm not really cashing out. Can you clarify what you mean by that?
Well, so one of the things Coinbase is going to have a record of, right, is all the transactions, the ins and outs of bank account money coming in, and fiat going out that you've cashed out. But if I've just used Coinbase mainly as my onboarding into Bitcoin, and I don't really have any transactions there of cashing out, so you're still positive, right? You don't owe anything. Are they going to start classifying? How are they going to classify all the transactions? If I just remove the money from Coinbase, are they going to? Would the IRS assume that it's been spent at that point?
Well, this is a very interesting question, and in fact, you've actually cut right to the heart of what it is that I do for a living. And this is exactly the sort of thing that I sort out. So let's say we have a model transaction. Someone purchases $1,000 of Bitcoin in Coinbase, and then they transfer it outside that account. Okay, because Coinbase is an account. I'm not going to call it a wallet, right? It's an account. So what you see what Coinbase knows is this person bought $1,000 of Bitcoin, and 3 weeks later, when it was worth $1,157, they transferred it out. Now, here's the first issue. Coinbase has a gain-loss report that you can go into your settings, advanced, and you can get a gain-loss report. However, once any Bitcoin leaves, they assume that this is a sale because they don't know what happened. They don't know if you were merely transferring it to a different wallet that you also control, like an Airbitz or a blockchain or a Bread wallet or any number. So once Bitcoin leaves your Coinbase wallet, their gain loss report will assume that you sold that Bitcoin, and then we'll tell you, and we'll return a number for the gain or loss. Well, what's wrong with that? It could be absolutely and completely incorrect. And I actually think that that's part of the reason why that so far that they have not chosen to send the information to the IRS on this, because it's kind of hard to figure this out. So let's kind of continue the model transaction. I'll buy $1,000 a coin on Coinbase, and then I transfer it out that very day, and I transfer it to a non-US exchange where I can do margin trading, and I place some good trades, and I make some money, and I end up 8 months later, I've doubled my money. I now have a USD value of $2,000, and in the meantime, I've done 200 trades. Okay, so I have US dollar value of $2,000 worth of Bitcoin on a non-US exchange. I decide I want to pay my rent. I send $1,000. I send $1,000 of Bitcoin back to my Coinbase account, and I sell $1,000. What does Coinbase know? They know that I purchased $1,000 of Bitcoin, transferred 1,000 out, transferred 1,000 in, and sold it. That's all that they know. But what do we actually need to report? We need to report the $1,000 purchase, the 212 trades that happened on the non-US exchange, which increased your total value up to $2,000. So you've got $1,000 of gain there, which is spread out in 219 transactions. And then when you transfer the 1,000 USD value back to your Coinbase account, you book that last sale when you go into dollars and cash out. But you still have all those hundreds, perhaps, of transactions that this individual was doing over time, and every single one of them needs to get reported. And that's why that is, frankly, it's kind of complicated.
Yeah, so even though Bitcoin is not a currency, technically it's property, people are able to use the property to trade and multiply the amount of that property, and that still has to get reported, even though it's not the currency. There's no magic loophole there just by using crypto. You still, if you're increasing your stack, you're liable, and then once you go into fiat, you're also liable.
Exactly. So that if you do again a margin trade and you end up with a USD profit of your Bitcoin has increased $100 on that trade, that's a trade. And the thing being that since Bitcoin is property and it's not a currency, whenever you go from Bitcoin to another cryptocurrency to purchase goods or services or pay an expense if you're a business, you have a transaction that you'll need to report. What you don't need to report is transferring money from one wallet to another that is yours. So I could take that same $1,000 I buy today, transfer it to a blockchain, that info wallet, keep it, transfer those same coins to an Airbitz wallet, hold on to that, and then just transfer it to a BitGo wallet, and then transfer it back to Coinbase. I can do that, and none of these are taxable transactions because I own all those wallets. But if I then, at the very end from I forget which wallet I said, let's say it's Airbitz, if I take $500 and buy something, that's going to be a taxable transaction because the value of the Bitcoin used, it's $500, but since the price changes all the time, I'll end up with a gain or loss on that conversion from the Bitcoin to goods or services.
Okay, I think that's pretty clear. So actually, along these lines, and I don't want to take up too much of your time, but back in August, you wrote about the Bitfinex hack and the potential for users to potentially write off some of this loss. So could you talk briefly about, I know it's been a few months since you wrote the Medium article, but could you talk about the different scenarios and the different rules for how people who lose money in a hack like that, how they are able to report it? And for example, if they lost it, but then they are getting these tokens that are converted to equity, how these different issues are affected. And yeah, we'll put the link in the description of the video, and you can see it in the chat there for any listeners. But so could you walk us through exactly what the rules are for affected users of the Finex hack?
Thanks very much for bringing that up. And when that happened, you know, obviously it's a pretty unfortunate circumstance. Chances are there's someone listening here today that had lost some money. So let's talk about what happened. Remind me, what was the haircut on the loss? Was it 35%?
Yeah, it was about 36%, and they had converted all of the outstanding positions to US dollar, and the liability then was US dollar denominated. And yes, by the way, from the users in this community, there's been millions of dollars at stake in the whole thing, so lots of users have been affected.
Okay, so again, Bitcoin is a new asset class. It's a new type of property. It's a convertible virtual currency. But there's a well-established set of rules for what happens when you take a capital asset and you sell it for less than you purchased. Okay, so, and again, we talked about capital asset treatment. I buy for $1,000, I sell for $1,100, I have a $100 gain. Hey, my trade doesn't go the way I want to. I buy for $1,000, I sell for $800, I have a $200 loss. So, and this is exactly the same as if I was buying and selling Google stock or Overstock.com or any stock. Same thing for Bitcoin. So what happens is you take all your trades, report them, and then you end up with a net gain or loss. If your losses are greater than your gains, then your losses reduce your gains. But here's the thing. You can only take a loss up to $3,000 a year. So if I have total losses from a bad year of trading Bitcoin and I lost $6,000, I'm allowed to report $3,000, and then I have a $3,000 loss carry forward that I can use the next year, and it never expires. It carries over indefinitely. So I kind of wanted to explain like the capital asset treatment and the concept of a loss carry forward. I'm literally reviewing my own thing here. There's a different rule for what's called a theft or casualty loss, which is essentially, well, in this case, I mean, let's say I had $100,000 of Bitcoin in my Bitfinex account, and I lost $36,000. This money was stolen from me. I've lost my value. Okay, let's forget about the shitcoin for a minute. Okay, let's forget about that weird little crypto token that they issued. Let's say I got nothing. Okay, I lost $36,000 due to a theft. Okay. Conceptually, it's the same as if someone broke into my house, stole the keys to my car, and drove away with my Bentley, which was used and was worth only, fair market value of $36,000. I have a $36,000 theft or casualty. Okay? So you take your fair market value of the loss, okay, but you can only deduct the loss that's more than 10% of your total income. So I picked a big example of a $36,000 loss. So basically, if you have a big loss, $36,000, you have to look at your total income, multiply it by 10%. If the amount of the loss that's more than 10% of your income, that is a potential deduction. So that's how the theft or casualty loss works. it applies for you have property that was stolen from you. It applies if you had a hurricane and your house was destroyed, and your insurance claim did not cover the value of the house, so you have a loss again. But it also applies again stolen property. So I think conceptually it's correct that if you had money on Bitfinex and you're a U.S. citizen, they stole your bitcoins. So these are the two ways to potentially cheat your transaction, either as a theft or casualty loss, but you've got those limits, or it's also possible that you simply have a capital loss. And everyone's personal circumstances are going to be different. It would require some real number crunching, but due to that 10% rule, many people will, and I have a detailed example in the link I just posted, many people will not be able to have use of that $10,000 law of the loss on as a theft loss due to the 10% and some other complications. But basically, those are your two options as I see it: a capital loss or a theft or casualty loss. By the way, the big important difference here is for a theft or casualty loss, the amount of that loss reduces your total income, not just your capital gain income. So if you end up, after we go through all the numbers, and you have a theft loss of $10,000, if you have a job and you get paid $100,000 of wages, you then reduce your total income by the $10,000. 100 minus 10, you have 90. If it's a capital loss, you only get $3,000 of a deduction, and you have 100 minus 3, which only gets you back to 97. So that's the big difference between the treatment here of a capital loss and a theft or casualty loss. Everybody would like to have a theft loss because you don't get limited to 3,000, but a lot of the time it won't work.
And you're not aware of any clients that have already attempted to perhaps declare this hack loss as a theft, as any kind of, I don't know, maybe you can't disclose that, but are you aware of any kind of cases trying to argue this successfully or not?
I really can't comment further, but I can tell you that there's good reasons I looked into this.
Okay. So I guess maybe we'll know more next year once the time has passed and people have already made these declarations. But I think you've made it clear how the different options for how they should be treated, and of course it's different on a case-by-case basis. So thanks for that very much. So if anybody else out there has any questions related to the Coinbase IRS news or Bitfinex, now is the time to ask, because we're wrapping things up. So just jump on the microphone if you have an intelligent question related to this for Dan.Winters. Okay, well, so I think someone in the chat is asking about just the international implications, and as you mentioned before, you don't know whether the IRS is doing this into. I mean, the IRS, the specific summons document is only for U.S. persons, but this is a larger indication that the IRS is starting to pay attention, and they went over and was harassing Switzerland, so maybe they are doing other things to other countries where other exchanges are based. Who knows? But I think I think that covers everything. So do you have any final thoughts yourself, Dan, on any points you wanted to highlight before we close this out?
Really, there's not a whole lot to say. I mean, I want to thank you for the opportunity for providing a platform here where I can talk to everyone here in the WhalePool and the trading community about an important development. I think this is something that for anyone out there with a Coinbase account, it's important. Even if you don't have a Coinbase account, it's important because clearly the IRS has decided we're going to pay a lot more attention to this. So it's really kind of a wake-up call for anyone who's got Bitcoin transactions that the IRS is paying attention. I also noticed that someone calling themselves Shot, they put in a link in here, and I want to say thanks for that. I'm going to send you a private PM because I want to take a look at that link you sent there. So I just want to say thanks for that. Maybe I'll ask
No
the
problem.
question. What do you mean same IRS agent? Is that the same agent that signed this declaration that I've been discussing?
Yes, sir. He was a contributing author to that piece. And I'm actually digging into his history. I may have crossed paths with this guy at some point in time. I used to live pretty close to the Thomas Jefferson School of Law in San Diego. And he also has a certificate from the open source investigations seminars that I've been to as well. So if he's been to them, he knows his stuff, and he probably understands the blockchain very well. And he's probably their lead guy for the because he's assigned right now to the virtual currency desk at the IRS's task force on offshore accounting. So they put a tax dog on it.
Now, you're talking here about David Utzke, Utzke, the one
Utzke,
that's
yeah.
his declaration we've been talking about.
Yes, sir.
Okay, well, it seems to me that you've been watching this stuff for a while, and I'm going to read through every word of this the link you sent along here. Yeah, that came out over 2 years ago, but
Yep,
so I just want to say
2014.
thanks for doing that. Oh yeah, here he is. He was a candidate. He was a law school candidate then. Yep, and I guess he got his degree.
All right, so just to close it out officially, Dan, let the listeners know where they can contact you if they are now shitting their pants because they have to report Bitcoin stuff. How can they get a hold of you and get some help?
That's my website.
Well, just or say just tell people by invoice as well, because some people are not looking at the chat. So just tell them where to contact you and website, all that stuff.
I just posted my contact information. That's my site, globaltaxaccountants.com. That's my email, Daniel.Winters at globaltaxaccountants.com. There's my phone number. There was one little thing on my mind. A swap. Something occurred to me because our call